Let's get in Jayesh Khilnani, who's found or observed a correlation between the US equities and the Indian counterparts. Not surprised there, but some chart analysis. And what do the charts suggest, Jayesh?
So Neeraj, the chart essentially suggests that India has mirrored what the US markets have done in the last 10 years or so. So if you look at the chart that we have on the screen, the top panel, the white line for all the charts that will come up on the screen, the white one is the Nifty and the blue one is the S&P 500. That's a 10-year chart. So you can see that in 2008, the US markets actually fell and India also fell in line. The recovery was also in line, and that has been the template so far till 2018. So what I did was, broke it down a little more to see where the falls were and how did India react to those global falls. So if you have a look at the other chart, so that's the currency, the China slowdown concern that happened in 2016. So you saw that, the S&P 500 actually clocked its lowest level since April 2014 in a rather swift manner. And you look at the recovery from Feb 15th, the entire loss has been recovered till March 31st. So that's a 1.5 month recovery for a near 10% fall. And India too also mirrored the same thing. So, from Feb 2015, we climbed from about 7,000 odd levels to 7,800 on the Nifty. Moving on to the other chart, there was a China currency devaluation shock that came in 2015, and have a look at this as well. So it made a double bottom in August 2015. The S&P actually fell nearly 10%. Took its while, about a month or so, to find the bottom. But look at the recovery from 30th September till 31st of October. All the losses have been recouped, and the similar case happened with Nifty as well. So we saw a move from about 7,600 to 8,200 odd levels on the Nifty. Now if you look at the other chart that we have on the screen, that will come up, which shows the emerging market rout that actually took place in 2014. Essentially the chart shows that emerging market stocks and currencies actually dipped quite a bit, but the recovery was rather swift. Now that was what I was referring to. So the S&P 500, that actually dipped from about 1860 odd levels to 1740. So that's a more than 100-point move, and it clocks its lowest since October 2013. And you can see that India too had a knee-jerk reaction where the Nifty fell from about 6,300 to below 6,000 levels. But the recovery was rather fast once again over here. So it just took less than a month to recover all of the losses. So that was the emerging market rout that I was referring to. There's another chart that we have for you on the screen, if we can pull up that one as well, which shows that there were some zigzag moves in the US market that was relating to the uncertainty about the US election in 2012. So you can see on the chart that will load up. Yes, so that's the uncertainty ahead of the US election in 2012. You saw that the S&P was largely flat, or it declined in November 2012, and it recovered all of its losses. So, and in fact, during this period, since it was a US-based election, India was not too much impacted. The Nifty actually outperformed, going from about 5,500 to 5,900 odd levels on the Nifty itself. Now, if you look at the other chart, there are some zigzag moves actually which came in for the Nifty. Now that was pertaining to the Fed policy uncertainty that we had in 2011. So that was also one of the charts that was interesting, and you can see that the zigzag moves were there. The Nifty actually declined from about 5,500 to 4,800, and once again climbed back to about 5,500. So there's enough and more such instances that shows you that India has actually mirrored, and the recovery has rather been swift.